EA has made a second bid for Take-Two, rejected. It is all the talk in Tech Town. Jim Cramer, we have you here at a ton.
Right.
Let me get a sense of the valuation here. $26 per share now for Take-Two.
Right. I mean, Take-Two. This is a real estate grab to try to have more real estate in GameStop and a couple other stores. You have to do that. There's a great perception that EA is doing really well. EA is doing horribly. Okay, I mean, just horribly. The stock has done nothing for years versus Activision. They haven't had a hit game. You know, the hit games are a Guitar Hero and a Rock Band. And you know, neither of these companies has anything really going for it. Take-Two did have a caretaker board. I mean, I think Take-Two's trying to fool around to get a little bit more. Kind of reminds me of Yahoo. I would sell Take-Two 9 ways to Sunday here because look at Yahoo, went to 31. I told people to sell that. It's the same kind of thing. Strauss Zelnick, I don't think really wants the CEO. I think he's happy to get rid of the company, but he's trying to play hard to get. Electronic Arts, I think this is almost a defensive move. I mean, I was hoping that Viacom would buy Electronic Arts. This makes the company even uglier. I believe that video games are the future. Activision proved that with its sale. But I just feel like that this is one of those things that really just points up that you can't short everything. That's really the takeaway of it is that you just can't short everything. Like the shorts were all over Take-Two endlessly about what just an awful company it was, but they never looked at the games, which are always pretty good. The Take-Two, they're not like Rock Band again. They're not like Guitar Hero, but they have some games that sell well. They have a library. What Electronic Arts would do is just take out a competitor, maybe raise prices. That's very positive. But they'll overpay. They'll make it so it's hard for them to be taken over. And what I want to point out is that if you have a strong player, a stock price player, which is Electronic Arts versus Take-Two, it's not a strong player. You should look out if you're shorting a stock that's a second-tier player. Now, this doesn't make me want to go buy Sprint, but I would cover if I were short Sprint. I mean, Sprint is a lot like this Take-Two. Better balance sheet of Take-Two. But Take-Two just reminds me, don't think that all companies are worthless. Because that's pretty much been the way that we viewed this market is that without takeovers and without private equity, there really is no value to anything unless you have a good dividend. And this should strike a little fear into people who just short everything.
All right, that's Take-Two. And they were saying that the Vivendi Activision deal was really what the catalyst was maybe for EA.
Yeah, well, I mean, it's just, EA wants to be in the mix. I mean, EA is pathetic. I mean, they should have done so much more with their franchise. In the end, this is like a movie company that hasn't produced a good movie. Everyone just says, oh, they're predominant in sports. And, but this is much more of a what have you done for me lately. When I hear the predominant in sports, that means that they're really not close to the real games players. And the real games players are games players who like these music games.
Guitar Hero.
Yeah, well, that's where the growth is.
All right, that is the latest on this tech news. EA bidding again for Take-Two, $26 a share. Stay tuned for more Wall Street Confidential.
That's your action point. Take advantage of it.